It's official, the Bank of England has increased its base rate by 0.5%, bringing the base rate in the UK to 3.5%, the highest level in 14 years. And in this video, I'm going to explain what it means for you, your mortgage, what your options are, plus what the increased interest rate means for the UK property market as a whole, which is poised for a potentially huge correction. But before I get into the video, for a limited time only, I am giving anyone who subscribes to my monthly investor newsletter a free, completely free copy of my personal property investment cash flow calculator. It's an Excel sheet which will be sent straight to your inbox as soon as you subscribe to my newsletter, so head down to the link in the description, sign up and get that free property investment calculator. And while you're at it, why not like and subscribe to the channel? Now, without further ado, let's get into the video. So, a question on the lips of everyone with a mortgage or looking to get a mortgage is, what do these interest rate increases mean for me? Well, the answer of course depends on your situation, but in general, if you have a fixed rate mortgage, then unless it is due to expire anytime soon, you probably don't need to worry too much about the interest rate increases. The interest rate that you will pay will not change as you're on a fixed rate deal. So until that deal comes to an end, nothing will change with your monthly payments. For those with a tracker mortgage, you are unfortunately likely to see your interest rate increase, meaning your monthly mortgage payment will probably go up.
No! No!
How much by? Well, it's a little bit tricky to say for certain, but if you have a £100,000 mortgage, your monthly payment will increase by about £27. Okay, so now that we know what the increase means for both fixed and tracker mortgages, what should you do? Well, for those of you on a fixed rate mortgage, nothing will change with the deal you are currently on. That being said, if your deal is due to end, it's important that you're aware that any new deal that you remortgage to is likely now to be more expensive, as interest rates on fixed rate mortgages have increased significantly over the last 12 months. So, if you know that your deal is due to come to an end anytime soon, i.e. within the next 6 to 12 months, then there are a couple of things that you can do. Number one, you can start searching for a new mortgage deal right now. You can usually lock in a mortgage offer 3 to 6 months ahead of time. Secondly, if you have a bit more time before your term is due to expire, it might be worth overpaying your mortgage. Why? Well, this will actually lower your overall loan amount and mean that when you come to remortgage onto a new higher interest rate, the higher interest rate will be on a lower loan amount, thus lower monthly payments. Now, when it comes to overpaying your mortgage, there is normally a maximum that you can overpay within a year. So make sure that you check all of this with your mortgage or financial advisor. If you're someone that has a tracker rate mortgage and you're a little bit worried about the potential increases to your monthly payments, well, it might be worth exploring if you can switch to a better deal. However, at the moment, many tracker mortgages are actually cheaper than fixed rate ones. And as always, there could be charges and penalties if you choose to end your term early. So it's best to always check the details for your personal situation before doing anything. Now, on to what all of these interest rate increases mean for the property market as a whole and prices. Well, according to Rightmove, house prices in the UK reached yet another all-time high of £359,137. This is almost £17,000 higher than in 2021. Rightmove data also shows us that sellers are on average asking for 2.1% less this month than they did in November, which is actually the sharpest drop in asking prices we have seen in 4 years, meaning asking prices are now just up 5.6% on last year and actually are slipping back fast. Now, one of the key drivers of house price growth over the past 2 years has been the complete imbalance of supply and demand. with the number of people looking to move far outstripping the number of homes available for sale. All of this has led to Rightmove suggesting the time it will take to sell a home will increase to around 60 days. Increasing interest rates have a huge impact on the property market. Back in a 2019 Bank of England paper, David Miles, Professor of Economics at Imperial College London, and Victoria Monroe, a senior economist at the bank, found that over the longer term, one can account for all the rise in house prices relative to incomes as being due to persistent declines in real interest rates. So, when property prices reach an all-time high, like they have done, and you combine this with higher interest rates, affordability really starts to become a problem. As if it wasn't already though. Currently, in terms of house price to earnings, as measured by the Office for National Statistics, buyer affordability has never been worse, at roughly 9 times average household income. And I think that we can all agree that house prices where they are and the current state of buyer affordability just cannot continue as it has done. So, does that mean that house prices are going to continue to go up or likely to trend downwards? Well, in my personal opinion, and that's all this is, I think house prices are likely to trend down. I think that we will see areas affected on a regional basis. So, it might be that the south of England, let's say London for example, sees a much sharper decline in asking prices than the north of England in somewhere, let's say like Darlington for example. But are we going to see one big crash across the whole country? Personally, I think that's unlikely to happen. So, for anyone looking to buy a home, it could be a great time to get a little bit of a discount. And for any property investors out there, it might be worth hoarding a little bit more cash than normal and just holding off and watching some of the regional trends to see where property prices are falling. Of course, if you're going to invest out of area, you have to make sure that you know that area inside out. Well, that's it for me in this video. I hope you found it useful. If you did, remember to like and subscribe, and of course, head down to that link in the description for my monthly investor newsletter and get your free property cash flow calculator. Remember, it's completely free and it's one that I personally use. So, until next time, stay safe. Bye.